Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 21st, 2024, and we're diving into Intuit's first quarter earnings report for fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Intuit, known for its flagship products like TurboTax, Credit Karma, QuickBooks, and MailChimp, has just released its Q1 2025 earnings report. It's an exciting time to analyze their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Intuit reported a total revenue of $3.3 billion for the first quarter, marking a 10% increase. John, what are the key drivers behind this growth?
Intuit's growth is primarily driven by its Global Business Solutions Group, which saw a 9% increase in revenue to $2.5 billion. Additionally, the online ecosystem revenue grew by 20%, reaching $1.9 billion. This reflects strong performance in their QuickBooks Online and MailChimp offerings.
And how did this impact their profitability?
Despite a slight decline in GAAP operating income, the adjusted EPS rose to $2.50, a 1% increase from last year. This indicates that Intuit is effectively managing its costs and leveraging its revenue growth to maintain profitability.
Segment performance and strategic initiatives. John, can you break down the performance of Intuit's different business segments?
Absolutely. Credit Karma was a standout performer with a 29% increase in revenue to $524 million, driven by personal loans, auto insurance, and credit cards. However, the Consumer Group and ProTax Group saw declines of 6% and 7% respectively due to the previous year's extended tax filing deadline in California.
What strategic initiatives are they focusing on to drive future growth?
Intuit is heavily investing in AI-driven solutions to enhance customer experiences across its platforms. Their strategy of integrating AI with human expertise is aimed at delivering done-for-you experiences, which they believe will continue to drive consumer and business success.
Financial health and capital allocation. Let's talk about Intuit's financial health. How are they managing their cash and debt levels?
Intuit reported a robust cash and investments balance of $3.4 billion against a debt of $6.1 billion. They are actively managing their capital by repurchasing $570 million worth of stock, with $4.3 billion remaining on their repurchase authorization. This reflects a strong commitment to returning value to shareholders.
And what about dividends?
They've announced a quarterly dividend of $1.04 per share, a 16% increase from last year, which underscores their confidence in sustained cash flow generation.
Future outlook and guidance. Looking ahead, what guidance has Intuit provided for the rest of fiscal 2025?
Intuit has reiterated its full-year guidance, expecting revenue between $18.160 billion and $18.347 billion, which represents a growth of 12 to 13%. They also project GAAP EPS to be between $12.34 and $12.54, and non-GAAP EPS to range from $19.16 to $19.36, indicating strong confidence in their growth trajectory.
What are the key factors that could influence these projections?
Key factors include the continued success of their AI-driven initiatives, the performance of their business segments, and macroeconomic conditions. Intuit's ability to adapt to technological changes and consumer behavior will also play a crucial role.
Key takeaways. In summary, Intuit has delivered a strong start to fiscal 2025 with impressive revenue growth and strategic advancements. John, any final thoughts on their investment prospects?
Intuit's robust performance, driven by its innovative AI strategy and strong segment growth, positions it well for future success. The company's commitment to shareholder returns through dividends and buybacks further enhances its investment appeal.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Intuit's performance in the comments below.